Right, all eyes are glued to Wall Street as stocks have had a rocky ride in recent days. The turbulent stock market has been raising big concerns for those who have invested their hard-earned cash and are looking towards retirement. Well, we're joined this morning by Ken Jones of the Binnacle Group, who's here to share some financial advice for what to do when stocks take a nosedive. Thank you so much for joining us this morning.
Thank you.
So first of all, this has been a lot of volatility over the last couple of days, ups and downs. We're talking about 1,000-point swings. How normal is this?
Volatility is always in the market. You know, you always have to expect some ups and downs, and we were looking towards a correction at some point. So I wouldn't say it's that abnormal. You know, now how it happened or why, you know, we still really don't know.
All right, so what should we worry about? I mean, like if you're invested in the stock market and people see a big drop, they want to protect themselves from further drops.
So most of us are investing our retirement assets into the stock market.
Right.
And if you're looking at retirement planning, it's a long-term strategy. So first thing is, don't panic. And I know that's hard to say, you know, it's hard to stay calm in a situation like that when you see the market go down, you know, 1,000+ points. But it's a long-term strategy, planning for retirement. So don't make any, you know, any rash decisions in just a small correction like this.
Because if you make rash decisions, you end up buying or really selling at a loss.
Correct.
And then when you want to get back in, everything is higher again.
Yeah, absolutely, absolutely.
So what are some general tips for folks when they are planning on retiring? Obviously, you know, what 20 and 30-year-olds should do is probably different than what 40 and 50-year-olds should do.
Right. So if you're 20 and 30, you want to, you know, first of all, look at your budget, set things up, you know, plan for retirement, start getting your 401ks set up your IRAs, start putting that together because you're going to be in an accumulation phase. And if you miss out on opportunities for putting money away in your 20s and 30s, it's really going to make a big impact in you know, when you do get to retirement. In your 40s, I think it's a good time to really talk to your financial advisor and let's start to hone in the details of what you want in retirement. You know, do you want to travel? You want to spend some time with the grandkids? Or are we just worried about, you know, I want to stay in my house and pay my bills? Once we get to our 50s and 60s, we really need to be in touch with our financial advisor to maybe adjust our risk, pull the risk back as we're nearing retirement, in retirement, so that this volatility in the market really doesn't play that big of an impact on our retirement funds.
So how do you help someone who comes to you and says, Ken, you know, I want to retire, I don't know how much money I need? How do people figure out how much money they'll need at the end, that pot of money, to sort of last them into retirement? Yeah,
it really comes down to budgeting and your expenses. I mean, we have some software programs in our office. There's obviously a lot of tools online that you can check out. But it really comes down to the budget and the money in and money out and what your expenses are going to be looking at. You know, everybody's are a little bit different and everybody's situation's different.
So you're going to have to make some lifestyle choices, you know.
Many of us do. Many of us do have to make some lifestyle choices and say, you know, what do we really need? You know, and at what point you know, do we have to ratchet things back a little bit on the spending?
So Ken Jones of the Binnacle Group. Is Binnacle locally based, and where are you guys?
We're in Troy, and we're an independent advisory firm, and we help our clients with their retirement planning and putting things in place for them, helping them get to the retirement line and stay retired.
And that's important. Stay retirement, not just get to retirement, but stay there once you're there. Ken Jones, thank you so much for joining us.
Thank you.
And thanks for the great information with this turbulent stock market.
Okay, thanks for having me.
And speaking of turbulent